But this is what I want to tell you. And Warren Buffett said it best. The stock market transfers assets from the impatient to the patient. And what that means is that, look, if you have the patience to be able to withstand this cooling off period, be patient and buy you some assets at a discounted price, you are going to be able to ride the stock market back up higher. And so now we need to pay attention to these three stocks. I have three stocks that we need to pay attention to, that you need to have on your watch list, because I'm telling you, opportunities are going to present themselves in these stocks. What's going on, everybody, and welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade for yourself. So make sure you please like, please subscribe, please listen to this episode from start to finish. I promise you, you will not regret it. Please note, anything discussed in this episode is not financial advice, so please do your own research before investing into any stock. In this episode, I want to talk about the stock market, specifically how we are experiencing a pullback and a cooling off from the running that we've had all year. But I believe that this cooling off period is going to provide an opportunity for us. In this episode, we're going to talk about the top stocks to buy on the other side of this pullback that I believe that we're going to be able to ride into Q4, which is October, November, and December. Let's get into it. First stock I wanted to look at is QQQ, and QQQ tracks the NASDAQ 100. And the chart that we are looking at is a weekly chart. So every single one of these candlesticks represents how stocks were trading in this particular week. And so I have a level marked of $387.98, and that is the year-to-date high for the stock. And as we can see, the stock has not eclipsed that level, and it has actually gone down. The last 2 weeks, the week of July 31st and the week of August 7th, we actually had negative weeks in the stock market. And so the stock market is experiencing a period of pulling back and a period of cooling off. And the stock market could potentially cool off some more because the stock market has ran so much. But this is what I want to tell you. And Warren Buffett said it best. The stock market transfers assets from the impatient to the patient. And what that means is that, look, if you have the patience to be able to withstand this cooling off period, be patient and buy you some assets at a discounted price, you are going to be able to ride the stock market back up higher. And so now we need to pay attention to these three stocks. I have three stocks that we need to pay attention to, that you need to have on your watch list, because I'm telling you, opportunities are going to present themselves in these stocks. So the first stock that I want us to look at is ticker symbol SMH. Now, SMH is the Van X Semiconductor ETF. This ETF holds names like NVIDIA, Broadcom, AMD, Qualcomm, ASML, Lam Research, and other semiconductor companies make up this particular ETF. And so this is a very volatile ETF, but this ETF performs very, very well. And so I have a level marked of 161.17. That's the high. That's the year-to-date high. And then it seems like we had a double top here, and then the stock broke down. And I have a level of 145.02, and we hit that level on Monday of this week. But we have a bullish engulfing candle here because of the news that we got from NVIDIA. NVIDIA went up 7% because Morgan Stanley said that NVIDIA was going to be an AI pick for the particular firm. And so we see that SMH was able to benefit from that because NVIDIA is a large position in SMH. But I suspect that since we had the red day the very next day, I suspect that SMH could retest this 145.02 level. Look, if you play this stock out long, I believe that SMH is going to get back to 161.17. And so we need to watch how trading is going on. But the semiconductors are going to continue to do well. This is a great area to buy this stock because we see that we have some consolidation here and we moved higher. But we're back into this range of consolidation. I don't see SMH breaking down much lower below this. So, I think that this provides a very, very good opportunity. I will acknowledge that there is a big gap here between 136.28 and 129.65 that will probably be filled, but I don't think it'll be filled that time. So I think that the stock still has bullish momentum, but again, be patient around this 145.02 area, and we may have an opportunity to get into some positions right here and play it back up to 161.17. Okay, so the next stock that I want us to look at is ticker symbol XLK. XLK is a technology ETF that is ran by State Street. And this particular ETF tracks all of the technology stocks that are listed in the S&P 500. Apple, Microsoft, and Nvidia are the top 3 names for this particular ETF. Now, this is what you need to pay attention to. XLK came down to this 166.33 level. And it's got a bullish engulfing candle, but I believe that this stock could come back down and it could break down to this $163.08 level because we see a double bottom right here. And so I believe that the stock can come back down and retest at this particular level. This will be a great area to buy and a great area to go long in because the stock is going to get back this 181.46 level. Remember, we're talking about Apples. We're talking about Apple. We're talking about Microsoft. We're talking about Nvidia. We're talking about stocks like Salesforce, stocks like AMD, stocks like ServiceNow. We're talking about the best technology stocks in the S&P 500. And so I'm telling you right now, this is a stock that we need to pay attention to because it could potentially provide an opportunity for us to go long on, okay? If you love technology, think about adding this to your watch list. Think about adding this to your portfolio because the stock market wants to continue to move higher. Once we get past this downtrend, I'm telling you, this stock, if you go long on it, it's going to get back to 181.46. Okay, everybody. So the third stock that I have is Apple, ticker symbol AAPL, the largest stock on the stock market. And so it's no surprise that Apple hit 198.23, but it sold off, and it sold off substantially after earnings. But what I'm telling you is that sell-off after earnings, I believe, provided an opportunity. And so Apple sold off and it stopped out at 176.55, which is a very, very key level here. But based off of how everything is trading right now, I believe that this level could possibly be broken. And it could possibly be broken to possibly retest this 170.42 level. This 170.42 level will be the next level that I may possibly, look at for the stock to possibly play. If it breaks there, there's a gap between 170.42 to 167.04. So that gap could possibly be filled at those particular levels. And so if all these particular gaps get filled, this is a great area, okay, to go long on this stock because we know how powerful Apple is. I believe that Apple is set up to have a great Q4, to have great iPhone demand, to have great holiday sales. This would be beautiful. Okay, this would be beautiful to be able to get into this stock. And so what I'm going to do is I'm going to show you the position that I'm in on Apple right now and how I'm going to play it if it continues to go down, because I believe in. Okay, everybody, so let's provide an update for the Trade for Yourself portfolio. And I appreciate everybody who loves this and who taps into this because I really want to give you all real-time information in terms of what I'm doing in terms of trading. And so if you've been tapped in with the Trade for Yourself podcast, you would notice that AMD is no longer trading in this portfolio because I had to cut this position because AMD was down about 10 to 15% at the time that I cut it. And I just couldn't keep holding on to it because the stock wasn't performing at that time. And if I believe the stock is going to continue to, retrace, I need to cut that position because I need to be able to preserve capital to get into new positions. So right now, I'm in the Apple. Right now, I'm in a Apple call for June 2024, $180 strike. Right now, I'm down about 4% on this position. But again, Apple came to a big discount when it dropped after earnings. And I believe that the stock is going to eventually get back to that $198, $200 level. This is what I'm thinking about with this position. I have capital on the side that I am going to utilize to add to this position if it falls to certain levels. Because again, I'm playing this to a $180 call out to June. So I'm giving myself time. But I want to, you know what I'm saying, average into my position and give myself time to play this out, because I really truly believe that this is going to be a great call. I'm telling you, pay attention to what Apple is doing. Pay attention to the catalyst that can get this stock to those particular highs. Remember, on the Q2 earnings call that they were talking about, they were saying that they expect iPhone sales to accelerate in Q3. And I believe that Apple is going to be able to accelerate iPhone sales in Q4 as well and make up for what they did last holiday season. So Apple is one of those ones that I am paying attention to substantially, and this is one that you need to have on your watch list and pay attention to what is going on. This is really truly what I want y'all to understand. Warren Buffett said it best: the stock market transfers wealth from the impatient to the patient. We're experiencing a cooling off period right now, but we are going to get on the other side of this. If you be patient and wait on your opportunities to buy these particular stocks, you are going to be very happy going into Christmas this year. As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like, please subscribe. Make sure you hit that notification bell so you can be in the know every single time I drop an episode. Reach out to me in the comments. Let me know if there's a particular stock that you have on your watch list that you're trying to buy. Do you believe that the stock can get back on an uptrend? Or is there a particular trade? Is there a particular options contract? Are there particular shares that you are trying to buy that you want to let me know about personally? Maybe we can talk about it here on the Trade for Yourself podcast. As always, remember, don't pay for it. Trade for it. I'm going to tap in with y'all on the next episode.